International Monetary Fund cut its outlook for global growth in 2015 and warned about the risks of rising geopolitical tensions and a financial market correction as stocks reach frothy levels. The world economy will grow 3.8% next year, compared with the July forecast for 4%, after a 3.3% expansion this year, the Washington-based IMF said. U.S. growth is helping lead a worldwide acceleration that's weaker than the fund predicted 2.5 months ago as the outlooks for the euro area, Brazil, Russia and Japan deteriorate. In advanced economies, the legacies of the pre-crisis boom and the subsequent crisis, including high private and public debt, still cast a shadow on the recovery, the IMF said in its latest World Economic Outlook. Emerging markets are adjusting to rates of economic growth lower than those reached in the pre-crisis boom and the post-crisis recovery. The outlook buttressed the case made by IMF Managing Director Christine Lagarde, who warned last week that officials need to act to prevent a prolonged period of sluggish growth, a trend she called the new mediocre. Raising growth in emerging and advanced economies must remain a priority, the IMF report stated. The Standard & Poor's 500 index declined for a second day, falling 0.7% to 1,952.03 at 11:47 a.m. in New York. The equity benchmark is about 3% lower than a record reached on September 18. The MSCI World Index dropped 0.6% to 1,670.23. Low rates. According to the report, a sustained period of policy interest rates near zero in advanced economies has raised the risk that some financial markets may be overheating. Downside risks related to an equity price correction in 2014 have also risen, consistent with the notion that some valuations could be frothy, the lender said without naming specific markets. The U.S. is a bright spot, according to the IMF. The world's largest economy is predicted to grow 2.2% this year, compared with a 1.7% projection in July. Next year, the U.S. is seen expanding 3.1%, compared with a 3% pace forecast in July. The IMF said it expects the Federal Reserve to start raising interest rates in the middle of next year, a projection that's in line with the median estimate of economists surveyed by Bloomberg. The U.S. Central Bank has held the federal funds target rate near zero since December 2008. Fed policy. The slack in the economy, well-anchored inflation expectations, and downside risks to the outlook imply that the current accommodative monetary policy remains appropriate, according to the fund. The euro area will grow 1.3% next year, slower than the 1.5% pace predicted in July, after a 0.8% gain this year, according to the IMF. We see the major risk in the stalling of the Eurozone, IMF Economic Counselor Olivier Blanchard said in an interview on Bloomberg Television. The risk of recession is there, he said, adding that European authorities should increase infrastructure spending to boost growth. If inflation doesn't improve in the currency bloc, the European Central Bank may need to do more to stave off deflation, including the purchase of sovereign bonds, according to the fund. Japan's malaise. Japan, where consumer spending has been curbed by a sales tax increase, also had its outlook cut. The IMF said Japan's economy will expand 0.8% next year, compared with a 1.1% advance predicted in July. Among emerging markets, Brazil suffered the biggest cut to its growth outlook. The country's economy is expected to grow 0.3% in 2014, down from the IMF forecast of 1.3% in July. The IMF now sees Brazil growing 1.4% next year, compared with 2% in July. China is forecast to expand 7.4% this year and 7.1% next year, little changed from the fund's forecasts in July. The fund said it is concerned some investors may be underpricing risk and not fully internalizing the uncertainties surrounding the macroeconomic outlook and their implications for the pace of withdrawal of monetary stimulus in some major advanced economies. Investor complacency. In a statement accompanying the new growth forecasts, Blanchard warned of complacency. These risks should not be overplayed, but policymakers clearly must be on the lookout, he said. Macroprudential tools are the right instruments to mitigate these risks. Whether they are up to the task, however, is an open question. The IMF said it is expecting a recession in Ukraine and stagnation in Russia in 2014, with the effects waning in 2015 and beyond. The effect could be broader if natural gas and crude oil markets are disrupted, according to the fund. In the Middle East, the IMF anticipates severe effects of military strife in Iraq and Libya. Oil prices could rise sharply if crude production is disrupted, the fund said. Blanchard said the world economy faces a balancing act. On the one hand, countries must address the legacies of the global financial crisis, ranging from debt overhangs to high unemployment, he said. On the other, they face a cloudy future. Potential growth rates are being revised downward, and these worsened prospects are in turn affecting confidence, demand, and growth today.